Good morning, welcome, good afternoon. Welcome back to the Opportunistic Trader at 2:30. I'm joined by Tony Greer, our equity expert, who comes on 4 or 5 times during the week to basically parse out his positions and give opinions on the broad-based equity market. So I want to welcome Tony. Thanks
Thanks,
for
Larry. How
joining
you
me.
doing today, man?
All right, everything's good. I'm happy it's Friday.
Yeah.
Big reweighting on the close here. Imbalances are coming in. It kind of looks a little bit mixed. There's overall about 100, 150 on balance to sell, but as you know, it's way early and that'll change. But some of the
Yep.
names are, fairly large size. I mean, the cash prints on the close are going to be very large, and it should be interesting to watch. And, I wanted to, just really open it up to you to discuss your thoughts on the week, trades that you've done. We discussed off the air, the areas that you're in, but I'd like to sort of go over it for our members and people listening in, where you would frequent and what you've done on the week. And I think it's looked pretty good. So I'd love to go over it with you.
Sure, man. Sure, Larry. I'm kind of happy. I'm very happy today. One of my favorite days of the quarter is quarter end, and at 4 o'clock is when I kind of clear my schedule and be prepared to sit here and go over where things close for the quarter, because I'm really looking to get set up properly for the fourth quarter. I'm really happy to see one of the long-standing short positions I've had on my position matrix. The European bank stocks are closed down 4%, on their ass today. It looks like we had another populist victory, and that the two finance ministers that are going to take office are going to basically raise Italy's debt to GDP level, and that is going to put them in direct conflict with the European Union rules, et cetera. So there was a little shakeup in Italy this morning that knocked the banks down to their lows again. This is sort of the reason why I like being long volatility in this higher vol regime when it dips down to, 11 or 12, the old lows. Um, and then so we've got that situation going on over there. It's definitely weighing on emerging markets, right? We had we've had some volatility in FX today with earlier on the euro getting absolutely slaughtered and then coming back a little bit. But in general, I think, I've been talking about and positioning for a strong dollar environment with higher yields and bouts of inflation here in the US. And I think that's what we're getting. So that sort of ties in the macro picture to me. Then I've got, social media stocks that I have been, vocally short and bearish. And we just had so another negative headline out of Facebook that there were 50 million accounts compromised. And I kind of just expect these headlines to keep coming and unraveling the social media, sort of bubble, I guess you can call it, if you ask me. And so Facebook, Twitter, and the social media stocks, potentially Google, which hasn't really cracked much yet. But I'm still pretty bearish in those names. I think that their best days are behind them. And, today's Facebook headline is another example where they're just going to continue to get their credibility chipped away at. And then I look at what's rallying today, and the cannabis names are up and closing the quarter strong, and, which is going to put them back to roughly unchanged on the year, some of them. And so that's encouraging to see a good close there. This quarter has definitely been a turnaround quarter for that sector. We had the crazy day in Tilray that put it on everybody and their grandmother's radar screen. And that's even having a pretty good, despite the astronomical and utterly absurd valuation, that's not having a bad close this week either, up just south of 150 at 136. So I think that's a sign that the market is still willing to take some risk, and a sign that the S&P can hang in there, especially against the other countries.
Yeah, I'd like to just touch on that just for 1 second, because you've been right on it, and you're in the right sector, obviously, by being short European banks and just emerging markets in general and whatnot. But the divergence to me at some point I mean, it's gotta. I mean, maybe it doesn't, but it's it's the
Well,
biggest divergence. Like I woke up this morning and the DAX was down 270 or 2%, and the S&P was down 11, 12, and then all of a sudden sellers disappear and the market turns positive with the DAX not even rallying, and the DAX is back down 7, 8, and we're up 8, 9 on the S&P, and that's pretty big. I mean,
yeah,
that's a
I tell
big
you.
divergence, but it could keep going, I guess.
Yeah, no, it really is, and I just charted it. I just charted the S&P versus the DAX to see that it's basically just a widening gap in the S&P outperformance. Um, I think that is definitely a trade war function. I mean, not necessarily directly that we are putting tariffs on European goods, but I think it's just a sign of dollar strength. The U.S. being the best place to invest on the map right now. This would all look differently if it was given fair and even media coverage, but I don't think that the economic story here gets any coverage at all. And when you look at the data, if you look at the data just this week, the data here was just fantastic. We printed a good GDP number. We printed, a new high in consumer confidence for this move. So like a multi-decade high. We've had weak data in the home sale department, and then we just saw a rebound this month, even in home sales. So I can't find much, if anything, to get bearish the U.S. economy over. And since that's the case, I feel like there's still going to be money flowing into the U.S. And so that's what's going to be the big disparity. We're going to rearrange. We're kind of leveling the playing field, and the U.S. is coming out on top here with the EM coming out on the bottom. And I'm still a believer that, Donald Trump being in office and handling this the way he's handling it, to me, means that whole entire EEM rally in stocks, I'm talking about ticker EEM,
Hmm.
from 30 to 50 is going to go all the way back to 30. So I'm still I'm a seething emerging markets bear because I see Jerome Powell as sticking to his guns and, raising rates, until it causes a serious problem. And maybe I'm excited by the Stan Druckenmiller, Kirill Sokolov interview that I listened to this morning. But Stan Druckenmiller in that interview said, if I was going to try to slow down this asset bubble, I would continue to try to sneak in rate hikes everywhere I could until, the macro market signals were showing that, there were signs that it couldn't take it. And, he even said, I'm not talking about a 5 to 10% pullback in the stock market. Like he was like, that seems kind of obvious. But he was talking about that Powell seems that he is at least close to back to being on this track of constant raising rates and normalizing. And I think that that's just going to unwind the whole EEM trade. They got a little bit drunk on cheap capital and cheap dollars there. With Argentina, launching a long-term 100-year bond at 7%. They had reached complete insanity right before Donald Trump started leveling the sort of flow of capital playing field on the planet. And that all changed. So I'm still super bearish emerging markets. And I feel like I can stick with that trade, especially if the ticker continues to behave the way it is technically, tracing back up into moving average resistance, failing, and then carving new lows. I'm hoping the same goes on with the social media ETF. It looks like it's going out kind of on its ass here. Actually, just for today's purposes, it's not the worst close of the week.
But
Or
let me just I agree with you on the social media stocks in general.
yeah,
Myself entering, I'm probably the top of the market because I got on social media probably about 6 months ago for the first time in my life. So
oh wow, yeah,
I'm experiencing some crazy stuff that I don't want to discuss
yeah.
on the air, but it's a realm that I don't understand. But like I'm looking at Facebook, and I agree with you. The news is extremely negative, and I think that their growth is slowing, and obviously they have a lot of issues with security and Congress, and you can name problem after problem. But for whatever reason, the stock doesn't break 160. I mean, the stock was 171.5 yesterday. So it's like a weird thing. Like I would think you'd see the stock in the 150 handle, but it just doesn't
Uh,
go there. So I don't know if this is a level that people think it's value, or since it was in the 220s or wherever the high was, that they think they're taking a stab. But again, I think this is multiple quarters potentially of trouble. So we'll see.
Yeah, I agree, but there are there are plenty of people that disagree with us in very high places in charge of enormous amounts of capital, Larry. And I had the same exact feeling as you that given the circumstances and the technical setup, Facebook should be lower. And I think that that's just our trader brain thinking way out ahead of the scenario, right? Because the reason that I think that it hasn't gone down as far as we thought it would have is when I go to the holders page and I see that Capital Group, who is the fourth largest holder, added 30 million shares in the last filing period. That's a significant bid, and that will definitely slow down the downward trajectory, especially when you have other funds like T. Rowe Price adding 9 million shares to their position, and Orbis Allen Gray adding 7 million shares to their position. So we basically just identified, a 40, 50 million share vacuum cleaner that would sort of soak up the mess from the people that are bailing out of the stock because they know it's going down. Um,
Yeah,
something
for
to
sure. I
consider.
mean, listen, you obviously have inherent buyers, but it's funny because I look back and I remember the IPO day when it went public that day, and there were sellers on top of sellers, and now obviously the company's come a long way, and they monetize the mobile aspect of their program. But we'll see. That's what makes that's what makes the game. But one thing I wanted to talk to you about, because I know you've been all over these home builders, and I was
Yeah.
wondering your thoughts if the trade continues, or is it very rate sensitive, or is it just because the like I'm feeling, even though, you know, I'm not really a barometer, but I see where I live in Florida, it feels like things are slowing. So I don't know
Yeah.
if it's that way in general, or people are getting more nervous.
Well, this trade is this is a tough look out the window trade for me. I'm on the South Shore of Long Island, and for whatever reason, there seems to be construction going on at all times and new builds going up at all times. So maybe it's because I am very close geographically to New York City. And so I don't really know about my channel checks in this trade making me comfortable.
Right.
This is more about the cost of capital that's going to that's kind of closing the door on new potential buyers, and pushing new homes or second homes out of reach. And and it's also lining up with the chart technically, where we basically after coming off the highs, we've spent 9 months consolidating in this sector. And what you're seeing now, it makes sense to me, where the actual builders are going lower in the XHB, and the consumer names within that sector are holding in there, like Lowe's and Home Depot. But we've spoken about, I think, Pulte Homes literally looking really bad technically now, curling over. Some of the other names as well. DR Horton is starting a little bit to curl over technically. And as these start, we start registering another quarter with bad performance. That's when you're going to see the portfolio managers say, yeah, you know what? It's not going the way I thought. Let's start getting out of these. So I think that if you look at XHB, there's a big break of this 38 flatline bottom coming, and that's where we'll see the acceleration to the downside. If we don't get that, then we learn something, and I should probably cover my short.
Right, but you have enough in it that you could just have a trailer, like
Yep,
a trailing
exactly. That
stop,
would
and
that would be my point: is to buy some back and put a stop on the rest of it, and just let them, let the price take me out.
yeah. No, those home builders are a good trade, and they usually trend one way.
Yeah.
One last, unless you have anything else to add, one last stock that I just wanted to ask you about is Tesla. If you had any opinion or position there, or looking for any levels, because it was funny. I spoke about it in our morning call with Vince yesterday, just out of nowhere. I was like, I somehow looked at it on my screen, and I was like, I can't believe the stock is back to 309. And then obviously the news was released after the close, and the stock traded. It's about 264.5, traded down to 261. But these are low levels, and from what
Yeah.
I'm gathering, he has to raise some cash. But I didn't
Yep.
know if you had any thoughts on it or
Yeah,
opinion.
I'm a pure spectator in Tesla, Larry. In my newsletter, I cautioned my readers that if they were long Tesla, that they were being irresponsible given what was going on with Elon Musk. And I said my piece then, and I didn't want to really hate on the stock, as a sort of bandwagon shorty, because I don't have the position on. So when I look at what happens after the SEC filing or the SEC lawsuit, I'm shocked that it hasn't come down through 250 and unraveled closer to 200, because I don't think this dip is any sort of a buying opportunity whatsoever. If anything, maybe it's pricing in the fact that Elon will no longer be the CEO, and maybe they'll get some rock star to step in and run the company, and maybe that helps. But like you, we're waiting for the math to line up on the credit side and see if they can make their payments. And I think that that's going to be in the end the answer. And it's still a stock that I wouldn't touch with 100-foot pole. But you know me, man. I've been sticking to my knitting this year, and I came up with the cannabis names and the refiners early, and it's treacherous being long these stocks that are punching into new highs, and you're constantly second guessing your decisions on what to do with them. So I'm focusing on those now, and very little on Tesla. I am not the expert in the Tesla room.
No, and I respect that, and I get that, and it's it's a trade that if I were going to look at it, you got to play it with options, not with the equity itself.
Yeah, but, it's exactly. It just seems like I'd be looking for some slow moving. I don't know. Maybe I'm not because I'm in cannabis names, but the Tesla just seems too toxic for me. I wouldn't be investing in it. It's not my kind of thing. Where every player in the market wakes up to see what's going on in a stock. That's the stock I don't want to be in.
Oh. For sure. And so the only thing that I'll state that I'm looking at, and it's not stock related, but it's volatility related, and I've been stating it pretty much all day today. Even though the VIX is 12 in the front month, the actual contract, the OCC VIX is almost 14.5. So, generally, I guess it's just that October effect. It's not high by any means, but it's at a 10% premium above.
That's worth noting.
Yeah,
it's worth noting. It's a sign of something.
Right. We just don't know when and where.
Yeah, exactly. And I mean, that's another thing that Druckenmiller gave up in that interview, is that he was, he's tried to short the markets before. But he's like still focused, because he's like, I'm licking my wounds from my last short. But he said, he's like, I don't know which one, but one of these rate hikes is going to topple the market, and that's going to be the end of it. And he's relying the same thing as me on, technical analysis and your gut to tell you when that time is. So that was kind of cool to hear. And, you did the only way to play it as far as I'm concerned. It's like you got to wait until the market starts telling you, proving to you daily that it has the propensity to go down.
Right.
Because on a behavioral basis only, I mean, this thing hasn't even started going down at all. In fact, we still keep cracking new highs. So it's tough to get bearish at all.
Yeah, but it's interesting. We will finish the month, not on near the high unless they do something late. But right. We're not 1% off the high, but in our world, 1% is now epic, because we haven't had 1% close, I think, in 4 or 5 months on a daily basis, which is pretty amazing.
Yeah, and it's also worth noting that there's an outside reversal. There's an outside day down in the S&P on an FOMC day, and that is another total sea change from what's been going on. If you remember, all the Janet Yellen FOMC days, it was sort of like Janet saying, this is what I say, and now look at the markets, they love it. The S&P is up 30 or 40 or something like that, all risk on, into the end of the meeting. And you're like, wow, I guess, she's just going to continue to, massage this higher. And, Powell steps up and he's like, bang, higher rates next year. The S&P has a very volatile day, closes lower. We're now closing lower on the week. So, maybe it's a sign that the ascent is slowing, especially with a big name like Facebook taking it on the chin with some bad news this week. If they finally turn the FANG complex, that'll give it a chance to really go down. But there hasn't been much damage there.
No, for sure. So we'll keep an eye on everything, and I want to let you know I appreciate you greatly. Your insight is incredible. I actually utilize it for myself. And again, Great. Thank you very much, and I look forward to starting back up on Monday, October 1st. Hopefully, we'll have a rock and roll month.
Hey, man, well, nothing makes my day and week than getting a thank you like that from a market wizard I read about, years ago. So thank you very much, Larry. It's my pleasure.
I appreciate it.
Anytime, my
All
man.
right. Have a great weekend, and I'll speak to you Monday.